Hello and welcome to Staking Mondays. We are live. My name is Ken. I'm here with the CEO and co-founder of Staking Rewards, Merkel Schmiedel, and today we are honored to host Zhuling Chen from RockX. RockX is a staking provider and node access service with over 900 million assets staked, 90 million in annual yield. And Zhuling, let's hop right into the lightning round short answer questions. So what was the spark that made you decide to dedicate your life's work to crypto and staking?
Yeah, so I guess I just can't resist my friends keep on talking about crypto back in 2016 and 17, and I decided just to give it a try, and that's how the whole story started.
Awesome. That's great. And what do you think is currently the most underrated project in crypto?
Yeah, so I'm still keep very close with Handshake. Yeah, because I think that's a project is mostly run by community, super decentralized, and also it comes with a big mission and also a very, very nice vision. I like. Yeah.
And how about the most underrated person in crypto?
So I think there are tons of them, but I'm gonna just go with my my colleague Guang Lei, because he's super hardworking and super sharp. Working on a lot of exciting stuff, particularly on MPC. Yeah, so I think he's definitely underrated.
Awesome. Really cool. And what's one learning from the last year that you will likely apply forever?
Yeah, so I would think, if we look back, last year is probably the time that we can go out and talk to everyone that crypto is real. Yeah. The years before, we can talk about it, but people think, yeah, maybe or maybe not. But now, the fundamentals are so clear, and now it has come to the time for builders, right? And I think it has come to industry that is large enough for everyone to grow and also to test out things. Really excited about it.
Yeah, it is super exciting. And what's one thing that you do to get away from all the hectic chaos in the crypto markets?
Yeah, I think one thing about myself is that I don't really trade that much. So it kind of take a lot of stress away from me. But I would still say, just do sports and go out. Definitely helps a lot, particularly in a time where, there was COVID and there was a lot of uncertainty in the economy and the whole political system. Yeah, so, we should pay attention more to the outside world instead of just looking at charts all the time.
Very true. Well said. Sometimes it's better just to step outside, get some fresh air. All right. So some of the topics we are going to be discussing today, guys, is the biggest challenges of crypto, the life of a blockchain validator, liquid staking, MPC, and the validator landscape. So Zhuling, let's hop right into these long form questions now. And Mirko, take it away.
Awesome.
Sounds
So
good.
Zhuling, what do you think is currently the biggest opportunity for crypto in general, as a very broad question, what is the biggest opportunity for crypto? And also on the other side, what is the biggest challenge for crypto today?
Yeah, so I would say that the biggest opportunity for us is about the timing or the stage where crypto is. Yeah, I would like to think about crypto is like the internet business back in the 80s. It's as slow, the blockchains are slow as the internet back in the 80s. And also a lot of fundamental infrastructures are still missing, right? And also there is a education needed to cultivate users, right? And also to find out how can we move away from just information listing on internet to something bigger. So I think the opportunity here is really it applies to everyone, right? If you are a technical person, there are tons of stuff you can build on in crypto. If you are a if you are a more like a community-based kind of people who like to try out new stuff, there are forums, there are projects that would like to hear you out, so you can always play an important part in that. And of course, if you're a trader or investor, make sure that if you have made some money, do invest some of them partially back so that you can support a really cool projects. And maybe you could be an investor of one of the next unicorns in the space. Yeah, so I don't think there was ever a better time to get into crypto compared to right now.
Absolutely. And we actually just had a really catastrophic event in the greater market this past month with the Terra Luna and UST DPEG event. So how has the Terra Crash affected you, and what are your learnings out of that situation?
Yeah, so that was a very unfortunate incident, and I think it kind of took everybody by surprise. So we started validating Terra since 2019. So we've been doing that since the testnet. I've seen the growth, the fantastic growth, right? And I think there was definitely a lot of attractions that they get developers in. Um, yeah, the past few weeks has been extremely busy for us. Starting with first collectively as all the validators, we need to halt the chain because otherwise there was a lot of issues. But then after a while, we also need to let some of the foreign assets to leave from the Terra chain. So we have to do another coordination with validators across the globe just to let to restart it. And after that, there was a long discussion of okay, what will be the plan forward for Terra, and hence now there is a Terra 2.0. So we're still validating both Terra Classic and also the new one, because we are holding the view that okay, the UST experiment actually failed in a big time, right? However, there are still projects and developers who want to build and also carry on the Terra chain. So hence there is still a need for the chain to exist. So I think the biggest learning for us is, in fact, during such a tragedy, um, you know, each company and also each person do need to have a certain risk control. Um, yeah, because this incident actually impacts more than validators, right? It also impacts all the investors that have staked, but also people who jump in the middle of the free fall and trying to speculate on that. Yeah, so I think people do need to think about okay, in such a situation, what should we do? Um, yeah, and hopefully after this we will also think about okay, whether what is a better way to do algorithm stablecoin, because that one has actually had a few quite a number of incidences since last year. Yeah.
Yeah, and it's really interesting to hear that you're still supporting the Terra Classic chain and Terra 2.0. So that leads us right into the next question. Sort of, you're also supporting major assets like ETH 2.0, Solana, Polkadot, Osmosis, Kusama. The list goes on and on. But how do you actually decide which networks to support? And is there any kind of re-evaluation process that those assets go through on maybe a biannual or annual basis?
Yeah, so we at RockX, we like to look at every single blockchain like a internet sovereignty, and staking for us is basically the sovereignty bond. Yeah, and our mission here is basically to bring in that bond together with the yield to anyone who is interested in that. And of course, we started with serving some large institutions. Um, and so, from a compliance and also from a risk management perspective, we started with supporting all the blue chips. So we try to support all the top 50 or top 100 in the space. Yeah. But as once we have supported all of them, we expanded our view to say that okay, as a validator, our role is not only just for layer one, but also we should support layer two and also cross-chain bridges, right? Because in all those three type of protocols, there is a role for validators. Yeah, so that's kind of how we have expanded our involvement in the whole ecosystem. We do look at our portfolio once a year. But however, if our clients do have a need for some smaller or emerging block protocols, we also help them to do a hosted node for our clients.
Awesome. And so what do you say to someone like who's considering to run their own validators, just to like spin up their entirely own operations, similar to like what you do exactly, compared to like delegating with you? Like what is the biggest challenge, and what's the overhead like to run validators yourself, basically, for someone who's considering that?
Yeah, so we definitely think, hobbyists or large companies, if they have an interest to run validators, um, by all means they should do it, right? Because this also increases the overall decentralization in the whole network, right? And also this probably, in the future makes them to also think about whether this is something for themselves. So I think for people individually running validators, a couple of things they need to watch out for is number one, the which is the overhead, right? So that's the server cost. Not all the blockchains have the same requirements for server specifications. As we know that Solana and a few other ones are having very demanding hardware specs, but at the same time, the bandwidth requirement has been increasing as well. And what we have been observing, and also we think, could even increase further in the future, is that as usage increases, probably it gets even more demanding on the hardware side. So which sometimes will need us to do a bit of optimization on the P2P layer or even on the protocol level. Yeah, so that's something that I think hobbyists should watch out for their cost. And of course, the second thing here is about the security part, right? We do 24/7 monitoring, so we try to make sure all the validators are running all the time. And also, since people stake on us, so we always try to make sure that private keys are stored very securely. So for other people, for individuals who are running validators, I think their private key management also needs to be taken care of.
Yeah, some really important points there on security, network hardware requirements. Maybe a follow-up question there. From all your knowledge you've gathered running validation services from many different networks, what network would a hobbyist most easily start running their own validator on?
Out of maybe just, if I think about out of all the major ones, no, I would say in the past it was more on the Cosmos ecosystem, right? So like Osmosis or Terra, or even could be like a Umi. So those ones are pretty straightforward to run because also the server requirement is quite reasonable.
Awesome. Cool. So maybe someone watching could spin up their own node later on in one of those Cosmos-based ecosystems. Very cool. So the staking market is very much becoming consolidated, with many exchanges acquiring professional validator services. You mentioned previously decentralization is a good thing when hobbyists or institutions decide to spin up their own nodes. But how will this consolidation of validator services within exchanges, how will that affect decentralization of blockchains? And what is the importance, again, of these smaller independent validator operators joining ecosystems?
Yeah, so as you rightly pointed out, Ken, a lot of exchanges are setting up or acquiring professional validators just to offer services to their own customers. This does, bring up a question of whether in the future those large organizations will control more than 51% of the whole network. And if in that case, this does not really feel like a very decentralized network at all. I think that similar concerns happened during the BTC mining pools, where the top 10 actually has a significant stake for all, right? But the good thing in POS world is that people, it's much easier to move out from some of the validators. But I think another reason why the exchanges are getting so much traction and also so much volumes, and also potentially for staking, is also because of right now a lot of people tend to store their tokens in an exchange instead of having their own non-custodian wallet, right? So this gives a advantage to the exchanges that, okay, all the tokens are stored over there just for the ease of use. Yeah. So I think this is gonna stay as it is for a while until people change their mindset and also their behavior. But if we think about, maybe back in 2017, there was not even trades on DEX. All the trades were on a centralized exchange, right? But 5 years later, the trading volume on DEXs are actually comparable to what has happening on centralized exchange. So if that trend continues to grow, this also means that more assets or tokens will be in non-custodial wallets. So I think if that happens, either DEX will work with independent validators to kind of bring in that decentralized or non-custodial staking service as a whole, or people will look for independent validators. Yeah. Also, I think funds would also sometimes prefer to stake on either their own or smaller or independent validators. Just for the sake of decentralization. And also perhaps this is for consideration of governance votes, because if you do staking via an exchange, right now I haven't really tried exchange staking, so I'm not so sure how governance voting would take place for them.
What do you think? Which role will liquid staking play, like in the whole decentralization play? Will it lead to further centralization or rather further decentralization of this space? Because it takes it has the same value proposition as an exchange, for example, that you have liquidity over your funds. But at the same time, if everything goes to one liquid staking solution, then it's also kind of a centralization issue. So do you think liquid staking is good or bad for decentralization?
Yeah. So this is a very interesting question. I think a lot of factors happens at the same time. So we're still trying to see how the dynamics would play out. So on one hand, we are a fan. We're a fan of liquid staking. Yeah. Particularly, we have seen the effect how liquid staking on ETH has promoted staking during the period that unstaking is not enabled yet. Yeah, so definitely that has so liquid staking has a very clear benefit to the whole system, and also we believe that this may also get some of the traders or even someone who is in need of liquidity to also participate in staking. So this kind of removes certain part of the entry of barrier and get more people to get into staking. However, like you said, this liquid staking feels like this is something that people naturally favors the bigger ones, the ones that with the best liquidity. So Lido, in fact, has been discussing very extensively internally and also openly whether they should limit themselves to a certain market share. We are one of the staking providers for Lido, so we are also thinking very hard and trying to make sense out of this. But I think the interesting question here would be, let's say if one liquid staking provider is the largest for now, can they actually maintain that? Because I'm holding a view that liquidity, especially though the ones are not doing delegation for long, they're more just go after liquidity and also APY. They may not have that much of loyalty to certain protocol, right? So there is always an opportunity that, okay, other liquid staking projects comes up, and those liquidity may move to the next one. How likely is that? I'm not so sure, but I think there is a likelihood, and we're also very interested to see how this would play out once merge and also withdraw is enabled. And secondly, again, here is about the voting part. With liquid staking, how would voting happens? Because this actually has a lot of implications, especially security implications to the blockchain itself, right? So who's if slash happens, who is gonna be hold accountable for that, and also whether this makes people feel that they can get much easily away from a blockchain. So I guess I can't really give you a very a clear answer to say how good is liquid staking. But I think right now in your market, this is something that is definitely needed, and it requires a lot of very close observation for us to figure that out.
Yeah, I mean, it's already a great observation that liquid staking has definitely helped to improve adoption of staking, and way more people are staking because of that, because it's much easier to stake and you have the liquidity and so on. So it's definitely a great thing. I fully agree that the whole thing is not figured out yet. So we'll see where that goes over the next years. You are also working on MPC technology, I believe. So that's also in relation to what we just talked about, how will, or maybe you can just explain MPC for someone who hasn't heard about it, in very simple terms, and then explain how this will change the world of staking in the coming years, you think?
Mm-hmm. Yeah, absolutely. Yeah. So, for us, what we believe is that one of the largest challenge or the potential risk in this space, or at least when people get into this space, is how to make their private key not forgotten or not being stolen, right? Because that's the only way to prove that certain assets belongs to you. So what MPC does, just particularly on on private key, is that when a private key is generated, instead of generated or displayed it in full term, the MPC would do something called decentralized key generation, DKG, so that the private key is generated in different shares. So no one has ever seen the full private key. Yeah. Then after that, the different shares can be stored, in different locations, or even being shared by different people. So whenever a full private key is needed to perform a signature, that's where the multiple parties will be coordinated to sign collectively. And again, during the sign process, the full private key is never disclosed or reviewed in any ways. Yeah. So in this way, number one, it's very hard for anyone to steal the whole private key. And secondly, the shares can be reshared, or meaning can be sent to other people, or it can be cut in different pieces in the future. So this makes things much easier for multiple people to work together. So when we started to look at MPC, actually we look at not from a wallet private key perspective. We were looking at how to make validators more secure, right? So in the current setup, every validator needs to hold a full private key in order to sign. Yeah, so this makes it a one-to-one relationship. We have a server and we have a validator. So if the server holds the full private key and hence need to sign on behalf of the validator. So if the server is down, the validator is also down. This is less of a concern, if we're just managing, let's say, a few or 10 validators or servers. However, in the situation of Ethereum 2.0, where collectively there's gonna be maybe hundreds of thousands or even millions of validators in the future. And for us, we are already managing around 10,000 validators. We try to move from this one-to-one relationship of managing 10,000 servers into more like a pool concept. As long as we manage the majority of the servers to be online, and they can sign for 100% of all the validators. That is a much safer way set up, to make the whole network more secure. So that was the angle that we look at it. So we've been working on this together with the SSV team in Israel, where they have been working on the signing part and also the coordination among all the node operators, where we focus on the MPC part and also the key sharing part. So this is something we think definitely is going to help all the validators, not just ourselves, but this also opens up a lot of new possibilities of how validators could work together.
Yeah, and regarding MPC, that sounds like it's going to be some groundbreaking advancement in regards to key storage with validators, and I think the whole industry is going to appreciate the work you're doing there. So getting back to the concept of liquid staking, do you think that this concept of staking delegations will even still exist in the future, or will the whole experience kind of be abstracted away via liquid staking? Call it 5 years in the future.
Yeah, I mean, again, I don't think all the blockchains are big fans of liquid staking. I remember some of the blockchain teams actually have openly said that, okay, they're concerned about too much liquid staking because it may create a situation, nothing's at stake, for people, right? Or, this could naturally make some of the validators too big, and also having too much of a say on a blockchain. So, and also, what we think here is that if POS tokens, the layer 1 tokens, are recognized as the digital petroleum, or as a financial asset that is adopted by financial institutions. Yeah, so financial institutions, unlike trading firms who are much more in favor of liquidity, so those institutions may hold a much longer view and they prefer delegation. Yeah, so I think from the blockchain team perspective, they may not 100% be big fan of liquid staking. They still want to have a bit of delegation. Then from the customer side, there are different types of customers who would probably in favor of delegation as opposed to liquid staking. Yeah, because end of the day, liquid staking is kind of a derivative, and it always comes with it basically introduces a bit of some additional risks compared to non-custodial delegation staking, right? So you always have the smart contract risk, and also you do have a risk of in the secondary market, how the swap ratio would look like.
Yeah, and we probably have to mention that like on Ethereum, there's no concept of delegations as well. So it's probably one of the reasons why liquid staking is so big on Ethereum. But this is also where like MPC technology and what we are working on could actually make a difference there. So do you think like this will be like the future? I remember like 1 week ago or something, someone from the Ethereum Foundation also had a post on liquid staking derivatives that it poses a risk. However, like on the other side, like there is a like 32 ETH requirement for running a validator. And then the MPC technology will actually allow someone without 32 ETH to run a validator, right? How would that look like in the future, you think?
Yeah. So how we look at it is that basically liquid staking and MPC are two complementary technology, because liquid staking is more just on the token side. It's basically a kind of like a staking pool, right, to collect all the tokens together. But then it still goes down to, okay, every 32 ETH on one validator. And then we need to make sure all the validators are safe. MPC, at least as what we are working on right now, is more to work on the full validator set. Yep. So, a group of validators could collectively making sure all of them are online. What we think is that this could make the whole validator set permissionless. So it could be a situation where a few professional validators and also work with a few hobbyists together as a group and using MPC. So this group of validators would be always secure. Yeah. Or it could be that, okay, maybe even large institutions or exchanges, they could use MPC to make all the validators collectively securing each other. So in fact, like Lido and other liquid staking providers, they are also looking at using MPC for their future version, because they think this is a addition to their existing security method.
That makes sense. Yeah. So what do you think will the blockchain landscape look like in general in the coming years? Like, will there be many different interconnected layer ones, or will everything happen on Ethereum eventually? Like we've seen like the many different layer ones pop up. Do you think there will be around in a few years, or like do you think everything will just consolidate on Ethereum because they have such a huge edge? With like once the merge happen, then like they basically are fully scalable as well. And yeah, what's your take on that?
I'm holding the view that there is gonna be a group of layer one blockchains existing, and they will be interconnected, right? The reason for that is that Ethereum definitely has the largest fan base, particularly the smart brains of developers, and also the amount of tools and infrastructures for developers. Yeah, so that one definitely Ethereum is definitely number one for that. However, I think people still have like different a preference in terms of what kind of blockchain technology they would like to have, right? So some people may favor Polkadot because of the overall architecture, and also some of the designs that they have done. So for example, I think Polkadot has a very well thought through wallet system, and also their delegation staking mechanism is designed pretty smart. That you can use proxies and not move and make and no one touches your main wallet, etc. And sometimes maybe people just favor something that is like way faster, right? Or even blockchains with privacy features. So I think Ethereum is flexible. However, it may not be versatile enough to meet everyone's need. And also, given that different blockchains has a huge war chest to incentivize developers, and also to kind of build their own fan base. Like what we have seen that Solana has been pushing a lot on NFT. Some other blockchains are doing other stuff. So I think there are definitely those blockchains will definitely coexist for a long time.
Absolutely, it does make sense.
Yeah, and I think. Sorry, yeah, go ahead.
Yeah, and I think you made a great point there. A world of many layer ones in the future with all different characteristics, the versatility, but being interoperable as well. And talking more about RockX here. So you guys are one of seemingly thousands of validators out in the market today. But how do you differentiate yourselves from other validators? And why would the everyday person delegate their stake with you instead of one of these other validators in the market?
Mm-hmm. Yep. Okay. So first of all, okay, if you look at most of the validators, they are mostly either in Europe or in America. Yeah, so we are kind of unique in the sense that we're one of the early validators that is fully based in Asia. So we're based in Singapore. Yeah, we also think that in the future, if you want to contribute to the full decentralization of blockchains, you should also consider delegate some of your tokens, probably not full, but some of your tokens in the Asian region. Yeah, because we may have like different ways of running validators. We're running like different time zones, etc. Yeah, so that's number one. And also number two, for us, staking is the starting point, because we would love to make all the blockchains secure, and also make staking accessible to everyone. And for us, we actually take staking a bit, and besides staking, we also provide access node points, for developers and also for institutions, either to interact with blockchains, or just to look at all the data on blockchain. Yeah, so we really want to make ourselves as kind of a gateway for people to get into this space. Yeah, so what we believe is that, okay, you need access points, and also you need private key management. That's why we're working on MPC. And ultimately, good, you have tokens now, and if you want to contribute to validation and gain staking yield, that's what we can do for the community.
That's awesome. Yeah. And I have a question, like, how do you handle governance decisions actually? Like for all the networks that you support, Validator also a very strong governance participator in like from voting to ideation and so on. How do you handle that internally? Like, how do you decide what to vote on and so on?
Mm-hmm. Yeah. So in the past, there was a period actually we do not do voting. This depends, right? Because for certain blockchains, they actually they separate. They still keep the voting rights with the token holders. Yeah, so that's why there was a period that we think, okay, we should stay neutral because we're validators. We should just focus on doing validation right. Yeah, so that has been a period that we were not so much involved in a lot of discussions. But more and more since last year, we start to get more involved in those decisions. So that's where we talk to our clients just to understand, okay, what's their view on certain things, on those proposals. And actually, in the future, this is something that we're testing out together with Interchain FM, because we're running a few validators on behalf of Interchain FM. So we're thinking of just having like a very quick community call, just to list out, okay, so for these let's say for Osmosis or for Wumi, these are the proposals that is in the pipeline, and this is what we think, and we can ask what do our community think about it. So this is something that we are trying to work on, but yeah, we need a bit more time and just to make things like in place.
Really cool. So, and like apart from all these like validation and like the access node, like what else are you working on, and how does your roadmap look like?
Mm-hmm. Yeah. So a couple of the interesting things we've been working on. So the first one is that we have been working on Lido of Avalanche. So this is so we are the team together with Hyperelliptic, who is in UK. So we've been working on together liquid staking on Avalanche for Lido. And in this case, we indeed introduce MPC for this for the design due to the multi-chain nature, and also the P chain of Avalanche does not have smart contract. So we thought the safest way is to have a MPC that controls all the tokens. Yeah, so we are on the final stage of finalizing all the designs for this protocol, and once it's ready, all the AVAX token holders can start to do liquid staking on Lido. Yeah. So the second thing is about distributed validator infrastructure. So that is a part we're using MPC to make validator set more secure, and they can collectively sign blocks. And recently we have been more focusing on our access nodes because we think, okay, now it's bear market, it's sad. However, this is also the time that developers can focus on, exciting stuff, and we want them to have affordable but also high performance access points. Whether this is about scanning through all the transactions, or this is about sending out messages. So these are the things that we have been working on. On the institutional side, we are working with a few Asian institutions to launch staking solutions to their customers. So these are asset management firms that they're with us. Their customers will be able to enjoy staking yield.
Yeah, very awesome what you're doing with all your developments here. I mean, even specifically with MPC, I think that's really, you can't value that enough, helping with the security of the validators across many different networks. And again, I think everyone in the industry appreciates your work and efforts there. So now we move into the show where we break some announcements live on Staking Mondays here today. So feel free to go ahead and give your announcement, Zhuling.
Okay. So I would like just point out that we have recently launched our access node portal. So meaning that if you go to visit www.rockx.com and go to the access node part, so that's where you can just register and get free access to over 20 POS blockchains. So you can test them out, and also the rate limit should be sufficient for most of the developers to test out things. And it's for free. If you need like more sophisticated access node, you can always contact us.
Awesome. So this is a tool where any developer can go to, right? To just like build the applications on top of the nodes. Are there any other use cases outside of developers who are building decentralized applications for that?
So we have clients who are, let's say, custodians or wallets. So they've been using those access nodes from us to scan through all the blocks, so that they know, what are the payments or what are the transfers have got into their wallets.
Awesome. Yeah, really, really cool. So let's move over to the community questions for today. We have first question here from Jamie. Like, what is the best way to stake Ethereum right now in a decentralized manner? Like, what's your take, Zhuling?
Yeah, if we're talking about a fully decentralized manner, I would still think that, okay, if you have 32 ETH, probably it's worth doing set up one validator of your own. If not enough, either you have to go with a liquid staking solution or go with an exchange for that.
That makes sense. Yeah, that's great. And another question, because you talked about like you are being from Asia, which is obviously great for decentralization. And have you heard about any validators from Africa, for example, or like any other underrepresented areas in the world?
Yeah, that's actually a very fair question. That's a super good question. We know quite a few, from Latin America or from most of the other continents. Africa, I'm sure I have come across a few individuals running validators. However, as a team or professional staking provider, not really. Yeah, but it could also be due to my ignorance, right? Because maybe I haven't really spent much time looking into that.
Definitely something for us to do a little more research on to see if we can continue diversifying stake across the continents as well. So really great insights here today. And Zhuling, what's the best way to follow your latest developments and whatever else you're working on?
Yeah. So the easiest way is to follow us on Twitter. So that's RockX official, or visit our website where we'll put up all the latest announcements and also updates over there.
Awesome. Well, thank you very much for coming on the show. Seems like a lot of the audience in the comment section enjoys your service as well. For everyone watching, please hit that like button. Be sure to subscribe to our channel if you haven't already. And you can check out previous episodes of Staking Mondays available on YouTube and Spotify. For Mirko, Zhuling, I'm Ken. As always, guys, happy staking.
Absolutely.